Hey everyone, welcome to the Juniper Links Counting channel. My name is Caroline, and today we're going to quickly go over something called payments on account. It's something I've wanted to make a video on for a while now because they can be a little bit odd if it's your first time receiving or being asked to make a payment on account. And effectively what it is it's a prepayment towards the following year of 50% each based on the liability that you have now. So if you are preparing your self-assessment for 2021-22, then your payment on account would be towards the 2022-2023 tax year. And these payments on account are due along with your liability for the current year that you're doing. And a little bit after that, so like about 6 months later, they'll ask you to make a second payment on account. So effectively, you're paying the same liability for the following year as you are for the current year. HMRC would only ever request these payments on account if your liability for the year is over £1,000 and a significant portion of your income was received outside of PAYE. So if you've paid the majority of your tax through PAYE already and you have an extra tax liability to pay, let's say you receive some dividends or capital gains and that exceeded £1,000, it's highly unlikely you would have a payment on account. Actually, capital gains don't count towards payments on account because those are not normally received every single year. So what HMRC thinks is that you'll receive a similar amount of income outside of PAYE for next year. So they want to collect that tax as the year is ending rather than 9 months later. So for example, when you're submitting your return for the year ending 5th of April 2022, the deadline is January 2023. So it's a long time they have to wait for a decent amount of money to come in from a lot of different people. So they don't want to wait that long for everyone. If you're regularly receiving this extra income that's not being taxed at source, then they want to get that off you sooner. Is effectively what the payments on account do. Alright, so what are some of the deadlines for these payments on account? And like I said before, they are due with the regular liability in January, but also there's a second one due about 6 months later by the end of July. The first payment on account is due by 31st of July of the respective year that you're submitting a self-assessment for. So for example, if you're doing the 2021-22 return, which ends on the 5th of April of the tax year, and I will get to why I've put this here in a minute, but for the 2021-22 return, the deadline would be 31st of January 2023. And for the second payment on account, that would be 31st of July 2023 as well. So this first payment is the exact same as the actual liability for 2021-22. The second payment is a little bit later and it's actually after the 2023 tax year ends. So as I said, the payments on account are kind of a prepayment, but one of the payments, or half the payment, is due after the tax year has already ended. So it's actually more falling in line with the end of the tax year rather than needing to pay anything up front per se. So I've put here that the tax year ends 5th of April, and this is actually related to the payments on account specifically because the tax year I'm talking about is actually 2023, which is the one that the prepayments are for. So in this case where you're submitting a return for 2021-22, the payments on account are actually going towards the 2023 tax year, which is ending in April of 2023. And as you can see here, the January payment is a few months before the end of the tax year, whereas July payment is a few months after. So you're never actually, if your liability is roughly the same year to year, you're never actually paying anything before you've received your income. Unless you literally receive all of your income at the end of the year, then you may be paying half of it a few months early. So that's a little bit of a different scenario there, but it's designed so that the payments on account are taken roughly at the end of the year and just after the year. Then, of course, when you submit your actual self-assessment for the 2022-23 tax year, your liability will be updated accordingly. These payments do become the most awkward the first time you have to make them because you are paying quite a big bulk upfront to get this cycle going, but then once it's going, you'll just be having to make two 50% tax payments in January and July each year. So it shouldn't be too much of a burden. However, it is something to keep in mind when, for example, you started your own business, whether that's a limited company or self-employment, and your liability does end up being over that threshold where they start asking for payments on account, that the amount of tax you've set aside has to be consistent with what you're receiving, as you go, preferably as you go, but just keep in mind that these payments on account will be there. And in some cases, you can actually request to reduce them depending on your situation. So I'm going to go into that next. So the only time we actually recommend reducing your payments on account is if you know for certain that you're not going to receive the same level of income that you received in the previous year in the current year. So as usual, whenever you're completing your self-assessment, the year has already ended. This is the only time you can complete your self-assessment. And then when you're having a look at the payments on account that HMRC have calculated for you, if you know your income's going to be cut in half the current year, let's say, then you can safely reduce your payments on account. You want to make a conservative estimate on how much your income is going to be for the current year, just because if you do underestimate these payments on account, then HMRC will apply late payment interest. Unfortunately, when the payments on account are triggered, the new deadline for your liability for the current year is going to be the 31st of January of the previous self-assessment return and the 31st of July of the current year. So obviously, if you drastically underestimate those payments on account and then you're submitting your tax return for the year ending 2023, one of those payments is already going to be late. So even if your liability happens to be below the payment on account threshold of £1,000 for the 2022-23 tax year, we're talking about the future now, and you've made payments towards this year, or you've made one payment so far, even if that liability happens to be less than the £1,000 threshold, the payment deadlines are going to be the same for the payments on account. Because the payment on account was triggered in the previous year, those are the new deadlines now. So it would have been 31st of January 2023 and 31st July 2023. So one of those deadlines are guaranteed to have passed because you cannot be doing your 2022-23 return before April 2023. And of course, the deadline isn't until 31st of January 2024 for that one, so you have to be a little bit vigilant there. Always use a conservative estimate of your payments on account. Don't assume your payments on account are going to be removed if your liability for the following year is actually lower. Then the threshold for payments on account, the deadline is still the same, unfortunately, and then HMRC issues a refund if you've overpaid, or they will credit your liability for the current year that you're submitting the self-assessment for. Okay, let's have a look at some examples of when payments on account would actually apply. So in this case, we got a small salary of about £13,000, just to note that it has used up the full personal allowance, so nothing's left over for the dividends. And then we have dividends of £18,000. So this may be something similar you'd see of like a limited company director, something like that, where they have their own business and they're also the only shareholder, and they receive a mixture of salary and dividends. So with salary, we can effectively discount the salary in this calculation because it's not really going to play a part for us. All of the amount there has been taxed through PAYE already, and most of that was tax-free anyway, so we can kind of ignore the salary in this scenario. The main thing to note is the personal allowance is gone, so all we have is the £2,000 dividend allowance to reduce the amount of taxable dividends for the year. So actually in this case, £16,000 worth of dividends will be taxed at 7.5%. And that works out to be £1,200 worth of dividend tax. So with this calculation here, this particular taxpayer would have payments on account due because the liability is over £1,000 and most of that's come from dividend income, which is not taxed through PAYE. So in this scenario, when it comes time to actually pay the tax liability, let's just clarify this is for 2021-22, then effectively what will happen is they'll have to pay £1,200 by the 31st of January. 2023. And then HMRC will ask this taxpayer to also make a payment on account of 50% by the same deadline. So 50% of this liability would be £600. So effectively the total amount they're paying by 31st of January 2023 would be £1,800. So they would need to pay this full amount, even though their tax is only this 1,200. they would need to pay the full £1,800 by this deadline of 31st of January, or late payment interest will be applied. So there's really not a way to get out of paying this payment on account unless you know you're not going to receive more income next year. So as an example, if this person knew they're closing down their business next year, there's no way they're going to receive this dividend income and they're only going to be taxed through PAYE, then they would be able to very easily make a request to reduce those payments on account as part of the self-assessment return. Payment on account simply wouldn't apply in that scenario where all the income's been taxed through payroll, and it's unlikely they would even need to submit a self-assessment for that year. So that's like the safest example I can give you. So we've calculated the 50% payment on accounts already here. That's a 50% amount, but there are two prepayments. So the second 50% of £600 would be due by that deadline of 31st of July 2023. And again, if you choose not to pay this liability, or you forget to pay this liability because it is it's a bit of a strange time to be paying something in July, we always recommend setting a reminder if you do have a payment on account due, because it's very easy to forget. And if for some reason that this isn't paid to HMRC when they're expecting it, then they're going to apply late payment interest as well. So that's obviously, the higher your liability gets, the more these payments on account will cost, because they're just 50% of your actual amount of tax you have to pay. So with this example, the tax isn't going to change that dramatically because the figures are relatively small. But if you do start getting liabilities of like £6,000 of tax, and then you get the payments on account whacked on as well, you're now up to £9,000 of tax. These payments on account are a thing, and HMRC will expect you to pay them. If you simply just request to reduce them, but you have the same liability next year, HMRC will calculate that you should have made payments on account towards the year you're submitting for. And if you requested to remove them, but your income was still high enough for the threshold, they will add those payments on account back, and you will have a potentially large sum of interest charged on your self-assessment account. So to avoid that scenario, I would say proceed with caution, be conservative with how much you're expecting to receive next year, or in the current year, sorry, and then make a decision from there whether or not you want to reduce those payments. And that's effectively how these payments on account work. If you do have questions, feel free to leave them in the comments below and we'll get back to you as soon as we can. If you enjoyed the video, then please go ahead and click that like button. And of course, if you like the channel and want to see more content like this, then please subscribe. We really appreciate it. And hopefully we'll see you in the next one. Thank you so much for watching. Have an amazing day.